Welcome to Smart Women Talk. This is your host, Katana Abbott. I'm a midlife millionaire coach and a certified financial planner, and I search the world for smart women and a few good men, including best-selling authors and thought leaders who are on that leading edge. So join us for conversations on money, business, health, and inspiration, so you can live with more purpose, passion, and prosperity. Hi, everyone. This is Katana Abbott, and I want to welcome you to Smart Women Talk. Today, we're speaking with real estate broker Marla Pennington to discuss whether it's a good time or just the idea of buying or selling real estate in today's market. So home ownership isn't for everyone, but for those who do take the plunge, either personally or for investment, they can create a lot of wealth. We're going to talk a little bit about, we're in a time of a double whammy right now, because since 2020, home prices have increased on average 50% and interest rates have more than doubled. So this is creating a lot of issues in the market. We're also going to talk about seniors and what they're doing, either downsizing for themselves or sometimes helping their kids out and becoming the bank for them to get a house. We're also going to talk about some government programs that are available to help those folks and ways to pay your mortgage off quicker and a lot more. I want to just introduce my friend. Her name's Marla Pennington. She is a very seasoned real estate investor, and she's also a national trainer, and she's one of our Smart Women experts. She's been on the show before, and I'm so excited to have her back. Marla, welcome to Smart Women Talk.
Thank you, Katana. Thank you for having me on. It's great to see you.
It's good to see you too. I mentioned about the market right now because when Mark and I bought our first house, interest rates were, I think, around 9%, and they had been even higher than that. And we were excited to get 9% because they were coming down at the time. Now, people are very frustrated because we have seen the rates come up, and hopefully they are going to go down. I did the math, and for someone who wanted to buy a $250,000 house in 2020, they could have gotten a 3% mortgage, and it would be $1,054 for a 30-year mortgage. Since then, the rates have increased 47%. I just use 50. And if we had 125,000 increase, that would be a 50% increase. The house would now be $375. And so that would be a $1,500 payment at 3%. But when you add the 7.5% that the current rates are, it's $2,600 a month. That's an increase of $1,600.
That's exactly right. That's a price point that's the lower end in my neighborhood. I bought in my neighborhood in 2016, October of 2016, and I wanted to downsize, and I found this townhouse for $150,000. My rate was 3.75 because it was considered a little bit more risky. I think had I bought a detached property, my interest rate would have been about 3.5. My loan, and I put 20% down so I wouldn't have to pay PMI. My loan was about $900 a month. My HOA was $250 a month. However, today my home is, and I did very few, almost no cosmetic improvements, some paint, but I got new windows, I put hardy plank on, but today my house with no cosmetic improvements, I could sell easily for $275. And yet the place where I was renting, where I rented for a short time in between houses, I was renting at about $1,275 a month, and it's about $1,600, $1,700 a month now there. For me, it was a very smart decision to purchase this home because in 5 years I paid it off.
Isn't that wow? Yes. Yeah.
Now, could I do that today? No, I probably could not. On the salary that I had then, I'm making more money now. I could not, but I would still personally, because it was for me, I'd still want to buy a home, but I would have to go to a neighborhood that's down the street. That's also, well, it's condos. I'm in a townhouse, but what's a little bit different is the form of ownership. But there, I just sold a 2-bedroom, 1.5 bath, pretty well fixed up and move-in ready. 1,000 square feet. I'm in 1850, 1,000 square feet for $157,000 and change.
Wow,
That's what I would, and it would be tough for me to afford it now. I'd really have to put more than 20% down because of the interest rate. It is definitely more expensive to own a home now, without question. And my experience has been in my townhouse neighborhood of 84 homes, and I'm in an outstanding East Memphis location. I have such a great location. We have private front and back patios, and we have 2-car garages. For $250 on the low end for something not improved, someone who is a first-time home buyer could move in. And what they've done is, for me, 3 of the sales that I've done in the last 3 year in my neighborhood, their parents have bought the home in cash. Now, all of these kids are in their 20s and they're very hardworking and they're paying their parents back. I see them driving to work all the time. We talk, and I love my neighborhood. I know everybody. We all watch out for each other, and they are working hard. But I don't know that they could have bought those houses without their folks' help, even though they have really good jobs.
do you think the parents are charging them interest and they're getting some retirement income, but they're doing a lower rate? Or do you think sometimes they have enough and they just want to gift the money early to the kids?
Yes, it can be both. Some people just say, look, pay me this much money a month, I'll buy the house. And that is a diversification of their money. That's how they want to do it. Others, I imagine, one of those boys is an accountant, and I imagine he worked out an amortization payment with his parents and is doing that to buy his home.
Oh, that's great.
So, yeah.
Well, let's talk about with the grandparents, or what I would call seniors. Yours would be a very desirable place for them to retire, I bet, too, from having big house, let's say, where they raised a family.
Certainly my price point is, and even my square footage, but in my townhouse development, except for 4 or 5 units, all the bedrooms are upstairs.
Okay.
And we still have residents. A large percent of our residents are in their 70s and their 80s, and they manage those stairs because they love our community and they don't want to leave. But eventually they have to. And so a couple of them, I'm listing one this week and one is coming in a few weeks. But you asked me something. I want to go back. You said something about, is it a good time to buy a home? So most people think realtors are going to jump on a question like that and say, oh my God, yes, it's a great time to sell a home. Hire me. It's a great time to buy a home. Hire me. But I just do not do business that way. I have to ask a lot of questions when someone asks me if it's the right time to buy a home. And whoever you hire as your real estate agent, I feel should ask you a lot of questions too, because buying a home, like you said, is not for everyone, but also until you know where someone's coming from and what they really need and what they really want, what their expectations are. If you have a good knowledge of the market, you're going to know if their expectations are in line with what is out there and what they might need to do or who they might need to go see for finances to be able to purchase a home. Where to go to check out different school districts, shopping, walkability. There's a lot of questions. Mostly I ask people, why do you want to buy a home? Tell me why. And then I just listen. And that usually elicits several more questions from me, because then I have a deeper understanding of why they want to buy a home. If they tell me my mom and dad are moving in, they're going to be here in 6 months, we have no bedrooms downstairs, we are in a time, that's a need that needs to be met quickly. But if it's, I think I might be throwing my money away, maybe, or maybe I'm not sure about renting and how much money, then you need to run numbers on how much money you spend as a renter and how much, because you don't have the maintenance, et cetera, and how much money you would spend in home ownership. For me, there is definitely an accumulation of wealth that I would not have had if I had not been a homeowner. And you introduced me as an investor. I'm not. I tried that once. I was terrible at it. I was a terrible landlord. I was awful. I have friends who are wonderful investors and they're great landlords, but I just wasn't cut of that cloth.
Marla, you just mentioned, for example, for us, if we were to move, we live in Michigan, is our property taxes were grandfathered in with just a very low increase each year. We live on a lake with a 3,000 square foot house. We've been here 30 years. Our property taxes, I think, are around $6,000 a year. And we have
Wow.
150 feet or something on the lake, and we're on the Huron River. If we were to move, we could move into a downsize, but the taxes would be more.
Mhm.
And someone moving in here, it would probably be tripled because the taxes have continued to go up, right? Some of the things people face is the change in the taxes. If they have situations like us, then PMI, HOAs, insurance, deductibles, moving to another place, the insurance could be higher, like maybe Florida. Repairs, improvements. You always want to decorate and change everything no matter what, right? I was thinking about that and I wanted to ask you because you see so many people wondering, should they, just what you said, rent or should they buy right now in this market?
Boy, you've got two things to consider.
Okay.
Your right brain and your left brain. You've got to crunch numbers and be serious about it. Don't fudge on it. Really look at what the cost is going to be. If you are really set on home ownership, which again, of course, I think is a wonderful thing. It's worked out great for me and from other members of my family, other people I know. But if you are set on home ownership, but you just cannot afford a home, is there a way that you could get a home and have a roommate? Are you a kind of person who could have a roommate? A lot of people are. I'm probably not one of them, but given certain circumstances, I might become one if that's what it meant for me to do for several years before I could own my home without someone paying rent to me or renting out a room, then I just might be I might be willing to do that. Then you've got your right brain, which says, wow, I would love having a place where I don't have the smoke from the neighbors next door seeping under my door, or all the noise overhead, or all the neighbors bringing their dogs to poop on my front doorstep. It could be, there's a lot of things about renting that are wonderful, and there are a lot of things that I did not like. I just felt like it was, and I lived in a great rental community. After 4 or 5 months, I was like, even really after 3, I was like, oh, I can't do this. You don't get, at least where I was, you couldn't get to know your neighbors like you do in your own neighborhood. And believe it or not, I live in a neighborhood where I know all of my neighbors. My neighbors know me. We watch out for one another without being nosy. None of that existed in apartment dwelling. There are some people who make plenty of money to buy a house and they'd never buy one. They don't want to mess with changing a light bulb even. They don't want to deal with home maintenance. You've got to really consider those. You've got to balance those desires of the heart with the desires of with the needs of the checkbook.
And I've got a friend who has houses in 3 different places and he maintains all of them. And he's been commuting to the East Coast and then to Florida and works in both places.
More and more people, Katana, are buying vacation homes when they get to be our age.
Yes.
Because they don't want all of their assets in stocks or wherever they want some physical assets. A vacation home on wherever they want a vacation home is often the answer for them when they want to diversify their funds. And sometimes they keep those homes or sell those homes or has a place for the kids to visit, or they might live there just during a certain part of the year.
And they rent them out too.
Absolutely.
Yeah.
Yes.
Yeah.
Yes, they can do that for sure.
Are you running into a lot of people that are downsizing? And have you ever had anyone look at a reverse mortgage?
I just want to say you want to really carefully and cautiously weigh all of your options with a reverse mortgage. They can certainly work in some situations, but generally there are other options. You just have to check them out carefully. There are certain companies that specialize in reverse mortgages, and if you have a reverse mortgage on your house and you pass away, what are the conditions for the heirs of your house to meet that reverse mortgage? I just recently spoke with a gentleman who put together a reverse mortgage for one of my clients. They wanted me to call him and talk to him, and I discovered what the parameters were that had to be met in case this client passed away, how the heirs would pay off that reverse mortgage. Another option is to go, and I have several clients looking at different independent care facilities where they move in and they go from independent care to assisted living to a more of a nursing home facility as they age. Many of these places are really nice.
Mhm.
They have beautiful facilities, lots of amenities, lots of things for the families there to do with activities. They take a lot of trips to places, and it's not like they're sitting dissolving in place. They're busy. That's one option. Some of them do go live with their children, but not as many, in my experience, as you would think. If you do, go live with your kids, especially if they have a spouse who passes. But more and more, they're aging in place. And when you live in a townhome situation like I do, it's like if anything happened to you, you could always have a neighbor be checking in on you. We're always checking in on each other. It's not like you're really alone, like you would be maybe in a detached property. But that's another option. And then sometimes they sell and they move into a very small place that's a 55 and over community. And we have more and more of those that have just 1 or 2 bedrooms, mostly 2 bedrooms. And they will work for an interim space. Sometimes they're in there 4 or 5, 6 years before they go to assisted living.
Mm-hmm.
There's a lot of different options. And again, you just really need to weigh the financial costs of each option.
I'm thinking that with all these boomers retiring, and you've mentioned the one floor units, and are ranch homes at a premium, do you think?
I think all homes are at a premium right now, in my estimation. I've lived long enough to think everything is expensive.
Okay.
I don't see them that way. Isn't that
Okay.
funny? But I imagine in certain areas they might be in maybe in 55 and up communities. I'm thinking there's usually most of the ones I'm thinking of just offhand have waiting lists, but not all of them. It depends on the price point. Really depends on the price point. You can spend $500 to $700. I'm thinking of several right now that really aren't even 55 and up, but they're all ground floor units.
Mm-hmm.
And then there are some that you can spend $250,000, at least in Memphis, but Memphis prices are lower than most other places across the country. What changes the demand for a property is this, at least where I am, is the school system that you're in. If I'm not in a particularly good school system in the area where I live, if you took my house and moved it just a block over into a different zip code, my $275,000 house would probably be $325,000.
This retirement boom that's been happening for many years, how has that affected young people, let's say first-time home buyers, trying to get into the market, competing with these all-cash offers? How is that affecting a first-time home buyer coming in who doesn't have the cash and may not be able to compete?
There's not as much inventory available because boomers are aging more in place. And you'll see I see YouTubers who'll say, oh, the market's going to crash. We have all of these baby boomers. They're all going to sell and the prices are going to fall. they're not all selling at once. Yeah, they're going to be selling, downsizing, or passing away, but this is happening incrementally. That inventory will come on market incrementally, but it's not like going to happen overnight, especially when boomers, like you were talking about your situation. It doesn't make sense for you right now to downsize. It would cost more unless you want to live in a different location. Okay, well, that would be something. But otherwise, you're going to stay in place longer. Most people my age stay in place longer than they would have years ago because it makes financial sense. They're driving longer, they're living long. I think they're living longer and they're enjoying where they live. It probably isn't going to change as much for first-time home buyers as it would have in the past when more boomers were downsizing, when the interest rates were lower. It's harder for first-time home buyers without question with these higher interest rates. And I do believe they'll come down some. I don't think they're going to float down to 3% anytime soon, maybe ever. Certainly, I never say never, but not in my lifetime. Now, when I got into real estate, which was in 2007, like sellers were doing everything they possibly could. They were starting to just beg somebody to come look at their home and buy it. Such a completely different market. And we had no idea what we were getting into. And I got my license in June of 2007. And I have tracked the market and it was just down every single month. And we're like, how low is this going to go? And fortunately, I got a few listings right from the get-go when I started. And they'd be priced right. And a week and a half later, they were too high. So we're like, how much incrementally do we come down? And as soon as they'd come down, then the market would bottom out over here. And we didn't know when it was ever going to stop.
Oh, yeah.
It was a scary time.
Yes. And you made it through. And
I did.
And how did you make it through? Because you didn't get out of that career.
A couple of things. I developed a slogan, professional service with a positive attitude, because everybody had a horrible attitude back then. And I aligned myself with a company that had outstanding training programs, that had a broker that was non-competing. That meant that she did not carry her own listings anymore. She was there for us full time. She was amazing in helping guide us and train us. We had a lot of education, a lot of training, and I knew that some people had to buy and sell homes and they might as well do it with me. Why not? They had to, so they might as well do it with me. And also, agents who'd been in the business just dropped out in droves. We had 4,500, 5,000 agents in our MLS, and we went down to, I'm pretty sure, below 2,500. So I wasn't competing against as many experienced agents because they just left the business. Nobody really knew what was going on. And the other thing was that I had a wild feather up my butt before I went into real estate, and I thought I would start a restaurant. I'll tell you, if you wanted to love real estate during the recessions, all you had to do was own a restaurant before that, because this was a breeze compared to owning a restaurant. That was the hardest work I've ever done in my life. I was like, man, all I have to worry about is me. I don't have to worry about the healthcare department. I don't have to worry about employees showing up to work. I don't have to worry about somebody slipping on a slick floor. I don't have to worry about the food prices. None of that. Real estate was a breeze compared to that.
So
it's all your perspective.
Yeah, and you do. You just have the greatest attitude, Marla. And I love watching you on Facebook. And you always do such a great job promoting your clients' homes and also celebrating after they buy a new one or you sell. You always do celebrate with them. What is the name of the real estate firm you're with now?
I'm with an affiliate of Coldwell Banker. My original owner sold. We have two owners, and one was the director of relocation for our Coldwell Banker affiliate. It's called Coldwell Banker Collins Mari. And my other owner is the former chief marketing officer for all of Coldwell Banker. That is an amazing team to work for because they're bringing such diverse backgrounds together. It's been wonderful. And as soon as they bought the company, we went into COVID. So much has changed in the real estate industry, but I'm now part-time in sales. I've downsized my sales and I do training. I train new agents and experienced agents.
One of the things we said we were going to share is for these first-time home buyers, there's some opportunities for them to get access to money. I have no idea what that is, and I'd love for you to share.
Okay, so those are not real estate programs. Those are lender programs. They're bank programs. Every buyer who is thinking of buying a home, who's got good credit, who has saved some money, you have to have some money. You can't buy a house without any money, okay? You have to have decent credit. But let's say you don't have quite enough money for a down payment and your closing costs, but you have excellent employment history. I would take all of your information and go to a couple of different financial institutions because every single one has a different program or programs that they offer to their buyers. Some programs are for first-time buyers. You might be a buyer who's owned your home over 3 years and you haven't lived in a home for a couple of years. You might qualify as a first-time buyer even when you truly aren't one. And all of these programs, they might vary. So we're on the Mississippi-Tennessee line. They might vary in Mississippi to Tennessee. I would just urge, especially first-time home buyers, don't forget to talk to different financial institutions, lenders, who can tell you what kinds of programs they offer, because it all depends on what their business model is, their focus is, and what government funds are available. For example, there are some suburbs of Memphis where, and this isn't for first-time home buyers, but where homes can qualify for USDA loans. Now, sometimes the money runs out and then it's replenished. And these are in towns. They're not like rural properties. And a USDA loan might cover all of your closing costs. And there might be buyers who thought, I didn't know I could move just one town over and qualify for a USDA loan. They have to educate themselves. I don't offer those programs and I'm not licensed in selling those programs, but I can direct my clients to different lenders who offer programs like that, different mortgage brokers who have, and you really want somebody, in my opinion, who is local, that if you want to sit across from it at the desk and talk to them, that will take time to answer your questions, even on a weekend, and hopefully can come in with me and you at the closing table and be a part of the whole transaction from start to finish. And a good lender will not only keep your client's agent up to date and what's going on, but will keep the other party's agent up to date so everybody can head toward a smooth closing.
I know we're short on time here, but do you have a tip for people on paying their mortgage off?
You might buy a house at 6% or 7%, but you look at the schedule of how much interest you're paying over 30 years. First-time home buyers may not realize that they may have the same payment they pay every month. And let's say it's $2,000, but $50 of that $2,000 for the first payment is going toward principal, and all the rest is the interest to the bank. Mortgages are in the lender's favor. Okay, they help us because they help us get a home. If we want a home, that's great. But realize that amortization on a home and how much you pay in principal versus interest is very different than, for example, in a car payment. I think my car payment is the same principal and interest each month. Because at my age, I wanted to pay off my home faster. Not every financial advisor will encourage people to do that because it is a forced savings plan. You've got to put that money back every month. But I started immediately paying. When I would sell a home, I would put more of that money down on the principal of my mortgage. It didn't change my monthly payment, but it changed the ratio of principal to interest that I was paying. And then when the stocks started going down, I just pulled money out, a lot of money, but not all of it to pay off my house by any means. But I pulled a fair amount out because I saw that it was on the downturn after having been on the upswing. I pulled it off I put it on my house, and then I was able in 2 or 3 years after that to completely pay my house off. And my house had gained about $125,000 in equity, and I owned it outright. I did it by paying a little bit extra each month, and you can set up your payments every 2 weeks if you want to. But there are other programs we're checking out.
Yeah. And you do have to look at your age and your time frame and your investments.
Oh, yeah.
See what makes sense. 15-year, 30-year. Do you pay more on it? That's really great.
Yes. I didn't want to be my age and have a house payment.
I know you just came back from a wonderful trip in Mexico where you think
Yeah.
moving down there, and then you and Don having your place that's all paid off up here.
Yep, we'll have this as a home base, and he's going to retire in a couple of years, and we're going to do a lot of traveling, and we can come back. Here is our home base.
You're at that third act as you came up with.
Yes.
You're enjoying yourself and continue
very much
to work in your traditional retirement.
Yes, absolutely.
You're a great role model for all the smart women who watch the show.
Oh, well, that's very sweet of you. I am having a lot more fun in my third act than I did almost, I have to say, in my second act.
I agree. I love the third act.
For sure. It's been a lot more fun.
Thanks so much for joining us, and give us your website.
I'm at marlasellsmemphis.com, and you can email me at marla@mythirdact.com.
Perfect. Marla, I love you to death. And,
I love you too.
Been here. We'll have you back again. I know we're going to talk about doing things and creating income in our third act later in 2025, and you'll be joining us then.
Yes, I hope so. Okay. Absolutely.
Thanks for sharing your wisdom, and I appreciate you being here.
Thank you, Katana. Love you. Thank you so much.
All righty. Okay. Bye. And everyone, thanks so much for joining us. We hope that you subscribe, you like, and you share the channel. Come to Join Smart Women, and you can join our community and get our easing and come to our Smart Women Academy. And until our next show, go out and live with more purpose, passion, and prosperity. Smart Women Talk is brought to you by Smart Women's Empowerment, a 501c3 nonprofit project of United Charitable. Music by Bill Lucas from his album When It Rains. Available on Apple Music and Spotify. Catch us wherever you listen to your favorite podcast, and be sure to join our free community at joinsmartwomen.com to access all our free Smart Women resources.